Today's number is 10. That's the number of stocks that have made up over 80% of the gains since Liberation Day this year. And what might surprise you is it looks like the market is getting even more concentrated. What tends to happen in markets like this? Could it affect us as investors and traders? And what is Warren Buffett doing that we need to be paying attention to? In today's video, we break down everything, including the advanced decline line increasing on the S&P 500, what's going on with Bitcoin after that massive rejection near all-time highs, and whether there could be other opportunities on the horizon. Guys, don't go anywhere. We're covering stocks, commodities, and cryptos with everything that you need to know right now about markets into Inflation Day. See you very soon. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, as always, we'll be discussing the latest macro, the big data, and of course, the flows that you need to be watching from Wall Street. We'll kick things off though with one of the best investors of all time, and that's obviously Warren Buffett. Berkshire seems to be declining in terms of its relative performance to the S&P 500, but has this happened before? Well, as it turns out, yes. And as you guys would know, we've been reporting over the last 1 year in particular that Warren Buffett has been building his largest ever cash pile position. Now, it's my belief, and I'm sure many of your beliefs out there, that he's doing this for a reason, and that is legacy, and that has to do with, of course, being right once again. And you'll notice that he's built cash positions like this at two particular times. One, before the global financial crisis during 2005 to 2006, which obviously was early because the global financial crisis happened later than that, and another period here back in 1999. These were both periods where he underperformed the S&P for a couple of years, and then he ultimately was correct. Well, guess what? We're back at exactly the same type of read here in 2025. So, does Buffett know what is right this time? Let us know your comments down below. Do you agree or disagree with him over the longer term? And, of course, what should we be looking for? Well, we are always on the lookout for the biggest problems. And as you guys know, it hasn't happened yet. It's still been all green, all good. And one of those reasons has been that we haven't seen inflation pick up for a little while now. Now, the latest detailed numbers are coming out in less than 24 hours at the time of this recording. And according to the street anyway, which we shared over on X, it looks like the general median forecast from Wall Street is that we will see an overall headline inflation pickup. And of course, we're going back to around 2.8% year on year in terms of the headline, and the core will go to 3.1%. Now, will this be driven by tariffs? Are we finally going to see the problems that many people have been speculating on? Well, just remember the last couple of years, we've really not seen anything in particular. You'll notice here that yields themselves have obviously gone up and down and all around, but not too much. They're really still been in a bit of a barrier. And inflation expectations have actually moderated for quite some time. So this hasn't been the data point that everybody's been, really looking at for quite some time. It's actually been about jobs numbers. And as you guys know, that's where the shaky question is, because most money is being spent in AI. The market is incredibly concentrated, as we mentioned at today's video. One of the biggest things that we've been seeing is 10 stocks have made up 80% of all the gains in the market. So that's a concentrated market. If they start to fall, then of course we've got problems, and we'll look at that soon. Let's take a look here at number of expected rate cuts. It does seem like we're starting to get a little bit more expectations of rate cuts after the unemployment figures were revised back. And remember, whenever we see these fake market jobs numbers, it seems to be that the next month, that 100,000 jobs that we made, well, we actually only have 30,000 of those. The 70,000 just disappeared. So that's, of course, going to be an interesting number moving forward. But here's where things get a little bit tricky. According to the latest Goldman Sachs report, tariffs are starting to show up in not only US businesses, but of course, the foreign exporters and US consumers. Now, according to the latest report from Goldman, it looks like the US consumers, many of you guys out there, are only paying 22% of the current tariff overall levels. In fact, businesses are absorbing the majority of these problems. Now, this is very normal. So what happens is whenever you see a large spike in price changes, generally a business will absorb it for a while to see whether it moderates, and if it doesn't, they pass it on. Well, according to Goldman Sachs, by October, so not very long away right now, we should be seeing a pass-through effect of tariffs. And of course, as inventory also starts to dwindle, remember we're speculating that 6 to 12 months worth of inventory has been bought in many areas, then we could be seeing US consumers fronting around 67% of the overall tariff cost. And this is going to be, of course, a big kicker to things such as this because people are getting ahead of it. This is always what happens. Whenever tariffs are introduced, what tends to occur, guys? Well, we see retail go out and buy ahead of those and start to actually increase demand. Now, according to the latest retail sales numbers, they actually improved in July amid some of the largest sales events from things like Target, Walmart, Amazon, etc. So it looks like on the surface, the economy is doing pretty well. But is it really? I thought this was an absolutely stunning chart when I looked at it and I thought, yeah, well, that seems about right. The share of young adults living with their parents, and I'm sure some of you actually are probably still living with your parents. Some of you also have your kids living with you still. Look at this. It's a wild number. Not since the times of the Great Depression have we actually seen such a high number of youths living with their parents. And this is actually kind of a sign of the times. The cost of living is high and people are struggling out there. And I thought that was a pretty striking chart. Another striking chart here is AI spending is actually eating into the US economy. So why are we up so much this earnings season? Why have we just seen one of the fastest V-shaped recoveries ever recorded? Well, the spend, at least the CapEx spend in things such as AI is actually increasing. I think it's been going from like, let's say 170 to let's say 250 kind of billion in 2024 to like 335. These are rough numbers, but you get my idea. The actual spend from the biggest AI companies, that's going up year on year on year in a big way. And it seems to be going through into earnings. But we're not actually seeing personal consumption expenditure increasing. That's actually dropping off a cliff. So if it wasn't for AI and the hype surrounding it, yeah, the US economy would nowhere near be as strong as it is right now. And you can really see this as you go through this earnings season. While it's been a very good earnings season, it's been driven specifically by two sectors. Communication services, which is a fancy name for obviously the tech sector, as it got split back in 2018, I think it was. And of course, the tech sector itself absolutely blitzing estimates. So what's happening here is that we are seeing a significant overall EPS growth. And that doesn't mean the economy is doing well. It just means that these businesses are doing particularly well. And as we mentioned, concentration, 10 stocks making up 80% of the gains over the last couple of months. Now, why is this important to face the facts here? Well, distribution of breadth is a key. And it's not something we need to necessarily be fearful of if you're thinking, oh, this begins the bear market or something. Generally not. In fact, I actually pulled the stats for this. And what we found was that when we have this incredibly concentrated distribution, which is basically just a couple of stocks raising the entire market up, that was actually fairly rare. But at the same time, it did be, it actually caused a pullback, which ended up lasting for around 1 to 3 months. And then ultimately over a 12-month period, the markets were actually up. So let me read some stats here. When less than 50% of the stocks are above their 50-day moving average, such as we have right now on the NASDAQ, that usually precedes short-term weakness. And this is data similar to other periods. Yet 1 year later, the index rose 91% of the time. So if you watched our weekend video, and by the way, anyone that's new, welcome guys. Hopefully you enjoy the content. Make sure to subscribe, hit that bell. One of the things that we've been seeing is that semiconductors have been leading. And some of the big discussion we've had now since the fall off back in Liberation Day was that when semis lead, you cannot really be bearish on markets in terms of you can't really sell them. You have to just keep, going with the rising tide. Well, what we saw was an outperformance of semis. And remember, when they tend to outperform, what happens next? Well, we usually get a pullback, but at the same time, generally speaking, 6 months later, in all 18 of those reads, the markets were actually bullish. So this is where we may be disconnecting from reality. The economy may need Fed support. It's probably going to need Fed support, and all sorts of other problems are starting to appear. But at the same time, it looks like we're starting to get real heavy gains here from, of course, these massive tech companies. Let's take a look at another big read. This is actually a bit of a bearish read, which comes from Bank of America, which says that global average cash levels have actually dipped below 4%. Now, this happened about a month ago, And of course, it isn't a timing-based mechanism. But what it does show you is usually a period of caution. When you tend to get these, it generally means the markets are going to do more volatility moves. We're going to see usually a weekly 20 moving average style return over the next coming months. And you're entering a period where everyone's super hyperactive and it just doesn't tend to give exceptional results. And that's what we've actually seen. We've been up, down, and we started to see volatility appear just a week or so ago. So it's that time to potentially have the powder ready, like we've been mentioning, and to, of course, pick your battles in the markets. Pick the ones that look the best on the charts and go with concentration until that ends. Now, let's move over to another topic that, of course, we love here on the channel, which is the hedges against fiat, the system that is many people believe is failing us right now, which is, of course, the dollar and all other dollars around the world. Well, it looks like allocation still hasn't happened from some of the biggest players into both crypto, which is good, of course, if you're a Bitcoin bull, and specifically also gold. 41% of funds not holding much gold, actually none, and not many of them holding large allocations. So could it be that we still have a lot more to go in gold and Bitcoin? I'm certainly starting to think so, especially in gold. You guys know I've been very bullish on it for the last 2.5, 3 years, and it's been doing exceptionally well. It's one of the best returns. Bitcoin and gold are the best returns other than, kind of like Goldilocks periods like PLTR by itself. So why is this all important? Well, we do know that, of course, earnings are sticking through with the Mag 7 pulling us along here in 2025. But next year, we need to see more. We need the rest of the stocks to come up. And I don't know if that's going to happen. What do you guys think? So basically, the market is saying, yes, we know the Mag 7 stocks and we know the top 10 stocks are going to be huge buyers, but are we going to see a trickle through to the rest of the breadth, the other 493 stocks, or I guess 490 stocks in this case? Because that is what the expectations are. And if you go over to our X account, links in the description down below, you're going to see a image, and that image actually shows that expectations of future growth potential from stocks is sky high. Like, I haven't seen a number like this. This is like the street have gone ballistic on their expectations of earnings, especially on AI stocks. And obviously that's being priced into stocks because, as many of you guys know, they tend to price themselves at least 12 months in advance. So that's why you always look at the forward earnings, and you also look at your forward statistics such as PE ratios, etc. Now, let's have a look at a couple of big trades. We got a massive dark pool transaction coming through one of the biggest silver funds. Now, this is, of course, an interesting point because is it a take profit target or is it just more of a accumulation? Well, you guys know I'm pretty bullish on silver and gold. So I'm going to go with it could be an accumulation, although we haven't got that confirmation yet. So obviously, we're looking for price to break through on silver, and we'll bring that chart up later. Now, you may have asked, well, did we see the start of volatility? This is the period of time that we generally do see vol start to pick up. And remember, in post-election years, it's August, September, October that you need to be paying attention to. These tend to be the months where you have potential sell-offs, you have kangaroo-style markets, which are up and down, you have euphoria that goes into them, exactly what's happening here. And of course, you tend to see potential sells. The data stats don't really lie. It does tend to happen. But just remember, guys, just because it tends to happen doesn't mean it always does. It's been one of the best statistics of the last well over decade. But that being said, when everyone finds out about something, times it can break. But just to remember, we have been saying this now for 4 or 5 years here on the channel. So it's every year we say the same thing around this time because statistically we go in with a bit of FOMO, a bit of euphoria, and we start to see volatility. So that should show up in the price action soon, and I think we're going to continue to see big movements. Now, another one of the stories that I guess not enough people are covering has been the injection of liquidity by China into their own markets. Just remember, we've been bullish on China now for well over a year. It's been doing actually very well percentage-wise, and they continue to pump liquidity into it. So it's just a matter of time, most likely, before those price action charts start to heat up again. And it did just hit the daily 50 moving average, which is, of course, a very, very key level. Let's now take a look at Bitcoin. So Bitcoin has been getting a lot of shrimps in it, which basically means retail traders like you and I, we've been buying up Bitcoin, Ethereum, everything else. Big funds have been getting into it a little bit more. Of course, we've seen Harvard, we've seen many other universities starting to get into it. So it's kind of legitimizing it in terms of overall everybody's getting involved. Well, as it turns out, this is usually the period of strength for, of course, crypto. And if it is to follow similar patterns to what it's done in the past, we still could be seeing further strength into kind of the 2026 period. So you've got to remember here when it comes to this was actually done in 2024. So this makes sense. Into the end of this year is pretty much where you're going to see the bulk majority usually of a Bitcoin gain if it's going to happen. And it already has a little bit. But just remember, this is actually an old timestamp. And that's why you see the data where it is. But yeah, it's doing exactly what you would expect at exactly the right time. It's why we love cycle analysis. Let's now break down the S&P, and then we'll look at some of the options moves. And then, of course, we'll go to the other charts and the lead indicators. First up, S&P 500. Advanced decline line is still pretty decent. So you can see here, it's just made a kind of higher high, which is not too bad. I mean, this is not exactly what you would say is super bearish on the charts or anything. We held 6,200, which is, of course, a tick level for the bulls, and this now becomes the battle zone. So do we have a high? Do we have a low? Do we have a lower high and then a lower low? That will signal, I would think, 6,000 at that point, and the mean reversion, which is the weekly 20. So make sure, of course, to spot that. But we don't have a sell that's appeared just yet. We've just got kind of like a volatile time and kangaroo style market, which is what's been happening. Option high-low levels here on, of course, the futures market. And as you guys know, yes, the trend is still intact here. Daily up, weekly up, monthly up. So the flow is still bullish. But I would be watching more than anything else this particular chart here, which is the MAGS plus Oracle plus PLTR plus AVGO. Now, why does this matter? It's everything. It's all of the gains. Look at this thing. It's a vertical machine. It's absolutely been going up. And congratulations if you've had all of these stocks. You're a machine, because look at that thing go. But what if it loses its incredible gains? Well, the good thing is you can actually do a little bit of TA on this chart, because what you'll notice is we're going up in a channel. So we've got kind of a low level here for the channel, and we've got a bit of a high, and you can actually see if it's going to break through. So definitely as a chart of the day, I'd say this one needs to be on your chart of the day, and you definitely want to be reading on this one. We will have a report. I'm actually releasing a report over on my LinkedIn if you're interested on this over the next couple of sessions. So this one here is pretty interesting chart, and certainly something I think that a lot of people are missing. So really cool one, and the stats are starting to come out for that. Let's now take a look at everything else. So first up, let's have a look at the yields, and we'll just quickly go through this. And basically ahead of inflation, you can see they've picked up a little bit, and it could be a break either way. Most likely we're going to see yields drop unless there is some really wild inflation figures. But in general, the Fed is dual mandated, and it is going to need to support unemployment should that be rising. So generally speaking, people think there's quite a few cuts coming, but that expectation may change. And you can see here on the dollar index, we've actually got a little bit of a pickup here on that 61.8 kind of pullback. So from the low to the high. So this is a very important time for bulls. If the bulls are going to win on the dollar, they're probably going to need to break a 99. And then we could see a movement up to 101.50, which is, of course, this inverse head and shoulders style play. So that's still involved. Another thing that we've been talking about in our private community, links in the description if you want to join that one, has been metals. Now, we've been a huge bull on metals, and particularly I think iron ore has been absolutely underappreciated. It's been totally thrashed now for quite some time. Well, that changed about a month ago, and we've been seeing quite a lot of increase actually in iron ore stocks. So they look pretty strong. They're coming into a resistance at the moment. They've broken the downward trend line, and they're picking up. So it looks like there's a bit of movement here in the metal space as people vie over probably what is going to be a big AI race as well, which is going to be buying different minerals and metals and rare earths to make sure that you can be ahead in the AI game. Because eventually AI is going to go to product. And when it does, of course, that's going to be a huge amount of rare earth minerals, metals, and all sorts of things that are needed to build that out. Let's have a look at gold. Could be an ascending triangle. We obviously talked about the pennant possibilities as well, like this. So if we break to the upside and we get through 3450, I'm starting to think gold could go 4,000, 4,200. So I might have to upgrade it again past 3,600, especially with this pullback in time. Remember, guys, it was the most traded, most crowded trade. Now it is not. So the most crowded trade now I think was dollar bearish, which is why we started turning bullish on it. You know, whenever it gets crowded, you want to be paying attention to the opposite side. Silver picking up a little bit, want to go through past 38.50. And obviously, most people are going to be looking for breaks above several of the rejection candles. So particularly that 39.50, looking for 42.43 on silver, ideally. And US oil, it's just a mess. This chart is a mess. Sometimes it's bullish, sometimes it's bearish. It's very neutral. And for now, I guess you'd go more the bear side as it picks up. But be careful on that one. It's very, very tough. All right, well, let's take a look at some of the biggest stocks and then we'll look at the indices. The big one here is, of course, Tesla. What exactly is going on with this stock? Has it just broken out? Well, in some ways, yes. We'll look at the gamma soon on the options flow, but this has gone past the downward trend line now in terms of it's actually made a higher high, and it has also broken through all of those previous periods. So technically, the market has actually started to pick up on Tesla, and it's going against what a lot of people have been looking at in terms of the data and the stats. I think you want to be trading this one just purely as more of a FOMO and fear style trade. We've talked about this for quite some time. Options is the key here. And when the markets kind of get ramping, it doesn't really matter what your opinion is of the stock. Sometimes the stock can go to blistering lights, even though it's fundamentally not good. And it's all about, of course, that recent news, which has been that Musk is getting a pretty big payday for coming back and spending some time on Tesla over the next couple of years. We'll see how that one plays. But for now, the bulls are in control. Now, if we have a look here at Nvidia, you guys can see it's still intact, still bullish. This is one of the big reads. As we mentioned, 10 stocks matter. The rest don't seem to at the moment unless you're going for rotation and smaller plays. But Nvidia is one of the big market movers. So it hasn't shown weakness. It hasn't broken below the daily 20. We haven't seen a lower low. So for now, it's all green, all good on markets. And another one that I thought was interesting was Coin, because of course we're seeing Coin and Ethereum start to match up with each other. And what this is meaning is that Ethereum generally goes up. So if you actually put ETH over the top, we'll do that now together. So let's just put on an ETH here chart. What you generally do see is a pretty decent correlation between both of them. And we haven't seen Coin pick up with the recent ETH move. So maybe it's a little bit behind. It did kind of gap up here, which is fairly strong, though it did reject by the end of the day. Interesting one for sure if crypto keeps rising. So then we have the Chinese markets, and obviously they've been improving recently. We saw a new high breakout. We've got back to the 50, which is where we thought we'd see a bounce. And so far, so good in terms of bounce. Remember, liquidity has been injecting. We're looking for a new high here, ideally to move into something like a 26,000 plus. So yeah, be looking for that to go bullish hopefully soon. And of course, then there's the US 2K. A lot of speculation on this. You'll hear a lot of people saying the most shorted market since 2022 in terms of just concentration. Yes, that's true, but hedges have also been buying a lot of positions. So in some ways, once you bring all the data together, it's really just a game of chicken and which one is going to create the squeeze. So we're looking for 2,300 to really start to get the Russell back on board. And for now, it's been a really bad performer. So inflation figures may push the Russell a little bit. And then, of course, the NASDAQ has really tapped that high. So could it be a double top? It could be in the future. We don't know. But for now, the trend remains intact. And the key level to watch is 22,800. So it's still all green, all good for now. The trend is intact. Semiconductors holding up and all of that stuff. What about Ethereum? Well, Ethereum broke through 4,000. That really pushes the possibility here of 4,600 plus. And it looks pretty strong on the charts. Another one is Solana that a few people have been looking at. Obviously, there's XRP as well. But maybe most surprisingly was Bitcoin, because it went up to 122, looked really strong, and then rejected again straight off this liquidity. So what we do know now is if the market breaks and closes back above like a 123, it's probably going to short squeeze. It's going to get very, very, very strong very quickly. And that's because there's going to be a lot of people trying to short here and go against it. For now, the trend is still, of course, bullish. Daily's up, weekly's up, monthly's up. So it's hard to go against that. But yeah, it'll be interesting to see how this unfolds in the most popular crypto in the world. So as we mentioned before, guys, we have inflation numbers coming. And with the inflation numbers, you guys know it was going to be expected that they will increase. Now, will it affect the markets much? There could be an excuse used for volatility, but I don't think it's going to really make that much difference. I always say to you guys, if you can't remember what the news was 2 weeks later, then it probably didn't matter anyway. So remember, we don't come from a fear standpoint. We come from an abundance mindset here on the channel. We're always looking for new opportunities. So don't really worry too much unless you actually see trigger points. Remember, flow is everything. Let's also have a quick look here at the gamma side, and the S&P 500 is obviously stuck between two zones. 6,400 on the call wall is a pretty big deal, and actually the call walls are starting to move even higher, but still 6,400 predominantly this week is important, and 6,300 on the put wall. So we are stuck between price, looking for a gamma movement either way. They're the two levels to be watching over the next 24 hours. Nvidia, it's still kind of in positive gamma. So realistically, still above 180, which means that technically the bulls are fully in control. And Tesla getting a lot of action on it. Next stop, if it keeps going bullish, should be around 350, because you can see how concentrated the calls have become at that level. This person here, though, they're still going to lose. And they've been getting smoked for quite some time. Those 900 calls. I don't know who it is, but they're wild. Hopefully you guys enjoyed today's video. If you did, remember to subscribe and smash that bell icon. And obviously, if you're interested in finding out more about what we do at FX Evolution, you can check out our courses, the Advanced, the Day Trading Masterclass, highly recommended. And then, of course, also check us out on X as well for more of our insights, or LinkedIn, where I've been posting quite a lot recently. Thank you, guys. You have a fantastic day. It's great to be back. I hope you enjoyed the crispier audio, and we will see you very soon. Bye for now.